I thought at the beginning of the year we'd get 8 to 10% returns this year, and we've already seen 10,
there.
and we're only halfway through the year. So I think the upside is somewhat limited. Earnings growth has been terrific, granted, but it looks to me like there's even some signs that might be a little slower than it was in the first quarter. The second quarter, the consensus is about 8%. We'll probably do 10 because we always beat. But a lot of that is driven by energy earnings and a rebound as a result of prices being higher than they were this time last year. In the broader economy, there's been a lot of disappointing economic news where things have fallen short of expectations, even though the jobs report was great. And it's long in the economic cycle. It's getting to be, seventh or eighth, maybe even the beginning of the ninth inning. So I think a little bit of caution here is warranted, given that stocks are selling for pretty high valuations.
You've kind of been saying that for a year.
Well, I went to a more defensive stance around March or so about the last 3-4 months.
That's it. So you were bullish from November on.
Yeah.
Okay. Michael, you I would say a lot of people are echoing what both you and Ed have said, that market might be a little bit overvalued, but it's don't sell here. And maybe, I think in your view, you need to just switch to some different sectors, but stay long. Is that right?
Yeah, we've done a little, exactly right. We've done a little bit of rotation, but not a lot. We've pulled a little bit of money, taken some profits out of technology, which has done very well, put it into some sectors that haven't done as well, such as healthcare and some consumer staples companies. So that part's going fine. But let's face it, breadth is really good. Where the techs have begun to slow down, the financials have picked up. The overall market is tracking along fine. The earnings are looking good. Pepsi is not the first company. I think there'll be others that beat. We've had, frankly, very few profit warnings for the second quarter, much fewer than usual, which bodes well for the earnings season. And I think that, we'll have slightly slower earnings than in the first quarter, but let's face it, there's less of a tailwind from oil prices compared to a year ago. So that's not disturbing either. I think that while I wouldn't be quite as bullish as I was 6 months ago, simply because stocks are up, I think we continue to ride for a while.